Well, folks, I hope you're ready for a dramatic next 5 days in the market. I'm about to take you through in this video everything we have going on over the next 5 days, and it's a lot. I'm going to tell you the whole tariff situation. Is this going to crash the market? If it is, how long is it going to last? We're going to discuss that. We have a multitude of massive companies reporting earnings. Palantir, AMD, we're going to go through a whole list. PayPal, we're going to speak about that in this video. Action-packed one. Then I want to go ahead and react to two specific videos up here after we get through all that. One is this one from the Professor Jeremy Siegel. Tariffs are the only negative in Trump's economic agenda. Looking forward to reacting to that one. And then I want to react to this one. Fast money traders react to Trump's flurry of tariffs as well. So then I can kind of hear some other people's perspectives there and kind of share my opinions and perspectives based upon that, right? A lot going on here, folks. I appreciate y'all for being here. I'm going to try to keep you up in tune with everything that's going on this week. It is going to be a busy week. This is going to be even a way busier week than last week was. And that's saying a lot because we had a lot going on last week. So I appreciate y'all being here. Only thing I ask from you guys is one thing only. Smash that thumbs up button. I appreciate y'all for being here. Additionally, if you want to subscribe to the channel, you can certainly be subscribed. We're approaching, I believe, 75,000 subscribers here on the Reaction channel now, which is absolutely phenomenal. Thank you for being here. Okay. So big news, China, Mexico, Canada, tariffs, boom, boom, boom. First off, is this a huge surprise? No. Trump's a tariff man. We all know that, right? Is this going to hurt the market? I think that's an important thing we got to understand. Well, we got a hint of it, okay? If you're ever looking for a hint on the weekend about is this going to hurt the market, look no further than Bitcoin. The great thing is Bitcoin trades all the time. And clearly, Bitcoin is sending a signal. As soon as those Trump tariffs came out, Bitcoin dropped off a cliff and it's continuing to drop. Listen. The moral of the story is Bitcoin can tell you a lot about sentiment. When sentiment starts to sour, get more cautious, scared, Bitcoin sells off. It's always like that. I don't see that changing, right? Bitcoin is not a safe haven asset. It is an asset that does tremendously well when the market is doing tremendously well. When the Nasdaq's soaring and everybody's bullish and optimistic, Bitcoin goes beast. That's just facts. When the market starts to tank, people start to get more cautious, Bitcoin tanks. That's not an opinion, that's facts. You can look at the price action of Bitcoin. Look at the price action, let's say in 2022 when the market was tanking, right? And everybody got real cautious. Bitcoin fell off a cliff. Look at Bitcoin in 2023, 2024 when the market was straight risk on. Flies to the moon. It's very, very simple in regards to that asset. So that's telling us a little bit of info there, right? But that's just part of what we have going on this week, right? And the tariffs are absolutely going to cause volatility in the market in the short term. There's no doubt about it. And there's no way this will be pitched as a positive unless Trump backtracks on the tariffs, right? And then maybe takes the numbers down to way lower amounts or something like that, right? If that was to happen or he took off the tariffs completely, that could be seen as a positive for the market. But as long as these tariffs are in place, it's going to cause a lot of volatility. It's not going to be good for the market. It's only negative. Let's just understand that. There's no positive here unless he removes the tariffs or like the number got stripped way down from where it is right now, right? Now, after the bell on Monday, Palantir's reporting. This is a huge sentiment stock. This is a huge sentiment stock. Let me be very crystal clear about that. And when I say sentiment, I'm really talking about for a lot of retail traders and investors, right? A lot of folks are investing in Palantir. I'm invested in Palantir. I've been invested for, several years now at this point in time. And it's treated me well, up 997% now on this position. But here's the deal. Palantir comes out and that stock tanks on Tuesday and for the remainder of the week. It's not going to be good for sentiment. It's definitely going to sour sentiment. However, if they come out and they come through with some epic revenue beat and then they guide higher for revenue for the next quarter, we're off to the races, right? And we could be talking about $100. So this is a huge one for sentiment. Now, I gave my full analysis and kind of breakdown on what I'm expecting for Palantir in this video here on the Reaction channel I did a couple days ago. Palantir stock is about to. So if you want more in-depth thoughts about Palantir, definitely check out that. And then in regards to when their numbers do come out on Monday, I would say I'll probably cover that on the main channel either Monday night or Tuesday, okay? Since Palantir is such a widely held stock, it's such a widely talked about stock, there's a potential I could post my breakdown of all their earnings and opinions and perspectives on the Reaction channel, but I would say there's a much higher probability I do it on the main channel, financial education. So do keep that in mind. Tuesday before the bell, PayPal. PayPal's reporting. Now, PayPal not as popular as Palantir, but is still fairly popular because you got to understand, I'm up $81,000 on the stock now. PayPal was a stock a lot of people picked up in 2023 and 2024. Why did they do it? The reason is the valuation got too compelling in 2023, 2024. And so a lot of us started positions in either 2023 or 2024 and added those positions, right? And now we're sitting really pretty. And so now we're all just waiting. Now, here's the phenomenal thing in regards to PayPal. Let me show you this. Check this out. Low expectations for PayPal. The expectations is they only do $1.12 EPS for this quarter. That's a very low expectation. And $1.13 for the following quarter. Very low expectations. Then if you look at next quarter for revenue estimates, only 3% for the quarter they're about to report here. And then if you look at next quarter, 3.8%. The expectations are very low for PayPal. If I think about a company that is extremely well positioned to come in and exceed expectations here, it's PayPal. It would be very disheartening if for any reason PayPal missed these expectations, okay? We should be looking at a headline on Tuesday after the bell. We should be looking at a headline that says PayPal beats earnings expectations and guides higher. Something like that. That should be the headline. If the headline's PayPal misses, oh no, we might go back to the 70s. I'm not expecting that. That should not happen. But, just understand that the expectations here are very low for PayPal. So I'm feeling really good about PayPal, especially seeing some of these other companies earning so far that are kind of in the payments more related space. I think we're looking good. AMD's Tuesday after the bell. Now, AMD's big, right? I've been adding this stock very aggressively, very quickly here. And this is another one that I'm not the only one buying the stock here recently. I tell you, there's a lot of people that are out there buying AMD stock actively right now. A lot of people are looking at it saying, I think this is a deal. I think we're getting a good value here in AMD, right? Especially if you have any sort of longer term horizon. Now, there's a difference between my hope on what happens to AMD versus what I think is going to happen. My hope is AMD comes out with earnings in Wall Street runs with something negative. I don't know what it would be. Maybe they even beat their revenue expectations to EPS, but it's something like something in the conference call happens, or Lisa Su sounds timid around the guidance. I don't know. So my hope is that happens and AMD stock goes down because I would like to buy more AMD shares, not less. I would like to buy more. However, I don't think that's likely going to happen. We already got a lot of fear going into these earnings because of the whole NVIDIA situation with DeepSeek and all that, right? And so you got a big flush of fear. You're going to have a flush of fear on Monday around tariffs, right? So you're going to get two big flushes of fear, which then actually sets up AMD very well to report after the bell on Tuesday going into Wednesday. So my guess is AMD probably goes up 5 to 15% on their earnings. My hope is it goes down. My thought is it probably goes up. That's my opinion in regards to AMD there, right? And so keep in mind, if the stock went up 15%, it doesn't matter to me. I'm not selling the stock anytime soon. This is a hold for me for likely the next several years. I mean, if you want to talk to me in 2027, 2028, 2029, 2030 about cashing some shares, we can talk then. And maybe I'll be willing to part with some of my shares then, but not in 2025 or even in 2026. This stock has a long runway of growth ahead for the next several years here. Now, Tuesday morning, there's a company reporting that, I'm telling you, this one, it could be, not a lot of people are going to be looking at this one because it's not a big name company. This is no PayPal. This is no Palantir, AMD. It's Estee Lauder, EL, beauty company, makeup company. They're reporting Tuesday morning. Now, here's the thing with Estee Lauder. You want to talk about a dog stock that's been kicked for the last several years. That's Estee Lauder. No, there has started to become some momentum starting to come into the stock, right? Suddenly I'm up 14% on it. It's starting to show strength. But here's the thing with Estee Lauder. Because the brands are so loved, and actually Wall Street does love this stock. They just haven't loved it the last couple of years. But if you look prior to the past couple of years, this was a loved stock on Wall Street. If they come in and just report a decent earnings with a decent conference call, the stock is primed for an insane move to the upside. Because the stock has been, you got to remember, Estee Lauder used to be a $300 plus stock. And they still own all the great brands they have. It's just the numbers haven't been great the last couple of years. So it's an $83 stock. All they have to do is come in with a halfway decent earnings and conference call, and I'm telling you, the stock is going to rip to the upside. And you would be looking at a Tuesday to Friday move of potentially 25 to 35%. I'm not talking small. We're talking 25 to 35% upside from Tuesday to Friday if they just come in with a decent earnings and conference call. If they don't do that, then obviously we're going to be stuck at lower prices, which I wouldn't mind. This is another one that I wouldn't mind buying more shares. I got $67,000 in the stock, $68,000. Like, I wouldn't mind. Estee Lauder goes down short term. I would love to buy more because the brands are so great with this company. That the brands get, if you have owned many great brands in a company, they'll get you through tough times. And that's exactly what we've seen play out here with EL stock. Okay, it's gotten them through, right? Stock didn't go to zero. Stock didn't go to, $30, $10. No, stock didn't go to gulag, $5. Still an $83 stock. And that's really not because of the management team. That's just because the brands are so great at this company. That's why it's been able to hold here. Then Amazon reports Thursday after the bell. Now, Amazon's phenomenal stock has done me tremendous. We're now up $140,000 on the stock in the public account, right? Amazon, they just come in, they beat. They do their job. They come in, they beat. A lot of times they guide higher if they do guide. Amazon's not a stock I stress about at all. And always remember one thing very simple in regards to Amazon. Always remember this. Every dip's a buy. It's just the truth. Go all the way back to the 90s with Amazon. Every time this stock dipped, it's always been a buy. Anytime it crashed, it's always been a buy. You could have bought it at the peak of the tech bubble. You could have bought it in the trough of the tech bubble. It doesn't matter. You could have bought it before the tech bubble. You could have bought it, right prior to the great financial crisis. You could have bought it during the great financial crisis. You could have bought it during the Rona crash, right before the Rona crash. It doesn't matter. When you bought Amazon, you made money. This is one of those very, very few companies, kind of like a Meta, a Google, an Apple over time, even an Nvidia, where every dip's a buy. And it's not opinion, it's fact-based. It's fact-based. And so Amazon's one of those, it's like, if you don't have a position in and you want to start a position in Amazon, it's one of those you want to root against. You want to root that the stock goes down in their earnings, right? Because you want to, buy for cheaper prices. Who doesn't want to buy for cheap prices? But the fact is, if Amazon does go down, it's a buy the dip opportunity, right? And honestly, if it goes up and rallies, it's still buy. That's the thing. Not only has every dip in Amazon ever been a buy, but every rally's been a buy in Amazon's history. And that will work all the way until Amazon's growth days are done. When there's very little growth left in their e-commerce side of the business and AWS and advertising, whenever that day does come, which might be 5, 10, 15, 20, 30 years from now, whenever that day comes, that will be the time when finally Amazon does not make sense to buy in the dip. There'll finally be the time where it makes sense to sell the rallies. But that's not today. And that's not tomorrow, and that's not this year, and it's not next year. We can maybe talk at some point in the 2030s about maybe Amazon's, every dip's not a buy anymore. We can maybe talk in the 2040s about that. That's when we can start to have that discussion. It's not in the 2020s, and it wasn't in the 2010s, and it wasn't in the 2000s, and it wasn't in the 90s, okay? Someday we'll have that discussion, but it's not today, folks. Then we have ELF reporting Thursday after the bell. ELF has been a beaten up stock. Obviously, it's been a tremendous stock if you've been in the stock for the last several years. We know about that, right? But it's been a very beaten down stock here recently. And the reason being is tariffs. Don't be surprised if the stock gets hit Monday, right? Tariffs are worrying everybody, right? Also people just always get concerned with where ELF's going to guide their numbers at when they come into a new year. There's just a lot of crap in regards to ELF as far as short-term worries here. But the long-term looks as good as it's ever looked in regards to ELF. Tariffs are going to be short-term, right? Like they'll figure out ways around that if they got to get product sourcing from other countries. Like the ELF will figure out a way around that, right? The bottom line is this is a very special brand with a very special social media presence that understands the Gen Z consumer, that understands the millennial consumer, that understands Gen Alpha, and is most well positioned to thrive over the next 10, 20, 30 years in the cosmetic space, right? even thrive even more than an Estee Lauder, for instance, which owns so many different great brands. And so Elf is a stock that if it falls on earnings, if it falls even prior to earnings on the Trump tariffs and all that, it's a buy, right? And if it falls after earnings, it's a buy. Like it's a buy. That's just the bottom line with that. It's a buy before earnings. It's a buy after earnings. And honestly, here's the thing with Elf. It's a buy before earnings, right? If it falls on earnings, it's still a buy. If it goes up after earnings, it's still a buy. Like that's a beautiful thing here. Because the valuations come down so much, regardless of what happens this week, down, up, all around, it's a buy. So do keep that in mind in regards to Elf on a Shelf. Now, as far as the earnings calendar, this is what we're looking at, folks. It's a busy, action-packed week, right? NXP is a big semiconductor company. That will be interesting to see. Obviously, we talked about Palantir. PayPal, Spotify is actually a pretty decent-sized tech company there. Pfizer could move around a little bit. Pepsi could as well. Those are big market caps, right? Ferrari's interesting. I actually thought about buying puts on Ferrari, but I don't know if I'm that brave. I don't know. Obviously, we spoke about Estee Lauder. Then we have AMD, and then Google McDougal's a big dog reporting Tuesday, right? That's important. Snap, Chipotle. Enphase is reporting after the bell on Tuesday as well. By the way, keep an eye on Chipotle earnings. Keep an eye on those. And the reason being is we know Brian Niccol, Mr. Taco Bell, he left the company. He's gone over to Starbucks now. Starbucks stock's already rallying. They're already really excited about him. But I do wonder if he left Chipotle because he sees a lot of weakness in the numbers over the next few years because they push comp so much, they push price points so much. And their brand, honestly, I think was really hurt last year, and that could come up in the numbers this year. But I don't know. We'll see. Keep an eye on the earnings, though. Keep an eye on it. Very important. Wednesday, Oobity Booba stock, because the great thing for him is now he wiped his hands of it. He's already over at Starbucks now. He's done with Chipotle. So now if Chipotle stock tanks, he's like, oh, that's not my problem. Like, I was out of there, and then the stock tanked, right? It's like, Oobity Booba's reporting Wednesday before the bell. Uber's just in a tough spot right now from the perspective of everybody talking about robo-taxis and all these things. And so, Uber's a good company, executing well. They're just stuck in a no man's land right now because people are talking about Waymo, talking about what Zeus, which is owned by Amazon. That's expanding actually in Vegas this year in a pretty substantial way. Then you got Tesla entering the fight this year. And so Uber is just kind of like, people are going to look at Uber similar to the way they look at oil and gas companies. And this is a problem with Uber, unfortunately, for anybody that owns Uber out there. People look at oil and gas companies and they say, yeah, still need it right now, right? Like, we still need oil, we still need gas, but no one's willing to pay up for those companies. Look, you want me to show you the valuations Uber, ExxonMobil trades at and Chevron and these sorts of companies? I'll show you, and you'll begin to understand like how tough this can get. Alrighty, folks, here we go. So I pulled up 1000xstocks.com here, and I'm showing you a comparison of, let's say, Uber's forward P, trailing 12-month P, 2-year forward P versus ExxonMobil versus Chevron, right? Here's the thing. ExxonMobil and Chevron, there's needs-based. They make so much money, it's ridiculous. But why do those companies trade at such crap valuations? Forward P on both of them is 13. And this is in a market where valuations are around the highest we've seen in a long, long time. And yet they still can only get a 13 forward P, even with valuations trading where they're trading? What? Why? Because people look at companies like ExxonMobil and Chevron, and they say, yeah, they make so much money now, but someday we're not going to need oil and we're not going to need gas anymore. That might be right eventually, but I can tell you short term, we're still going to need oil and gas. No different than we still need Uber rides short term. But the worry is, do we still need Uber rides 5 years from now, 10 years from now, 15 years from now? And that I can't definitively say yes, we will, because we might not. Like when Tesla robotaxis are all over the place, and you got Zeus all over the place, and then you got Waymo all over the place, and then you have other robotaxis. Like I don't know. Like maybe we don't need Uber long term, but we certainly need a short term. So Uber could make all the money in the world for the next 3 years, and people would be like, that's a tough place with Uber. They could make all the money in the world, and people are like, still don't want to own it. No. Now, the good thing with Uber's business model is they do have their food delivery business, right? Which I think is more durable longer term because that is human. You need humans. And so the thought of, robots are going to come pick up the food from the restaurant and then take it to your house. Oh, that's going to happen someday, like 25 years from now. Okay, 20 years from now. That's not happening anytime soon. So the moral of the story is, in 10 years from now, a decade from now, if you want to order something, from a restaurant and have it delivered to your house, a human is still going to be doing that. And so therefore, Uber Eats has a more durable, I think, long-term business there. But in terms of a car just coming to pick you up and take you to a restaurant, I think even in 5 years from now, I think it could be more commonplace to have a car come pick you up that doesn't have a driver in it than does have a driver in it, right? And I experienced the product when I was in San Francisco. I took a lot of Waymos around. Good product, really good product. Not perfect, but it's 2025. Like, they have several years to get the product perfect, right? So that's what's going on there. You had Ford, Qualcomm, ARM should be interesting to pay attention to their earnings on Wednesday after the bell there. O'Reilly Auto Parts. Thursday after the bell, as we spoke about, Amazon and Elf. Cloudflare is also interesting. Affirm, just here with what's going on with the consumer. Hershey company. That's an interesting one to watch Thursday before the bell. That stock's been hammered, man. I mean, hammered hard for a chocolate company. But there's all this worry about Ozempic. Oh, people aren't going to eat as much junk food and chocolates, and that's going to hurt Hershey's business. And then what's RFK going to ban, and how's that going to... There's a bunch of worries in regards to that right now. So Hershey's is going through it. Cocoa prices have gone to the moon over the past year. So Hershey's is really going through it right now. It might be an interesting pickup at some point this year. Like there's so many opportunities in the market that I like that I'm kind of like, Hershey, maybe, we'll see. But it might make for an interesting pickup at some point this year, especially if it drops on earnings. Like I never thought I would own Hershey's, but then again, there's been a lot of stocks I bought over the years that I never thought I would own Netflix, and then the 2022 crash happened. I bought Netflix stock. Wild things can happen. Amazon, I never thought I would finally get to own Amazon, and then the 2022 crash happened, and I started finally buying Amazon. So you never know. Wild things can happen. And then as far as that goes, Canopy might keep an eye there for the Jack Jackson space on Friday. Let's react to some videos around tariffs.
We see a market doing what it is on these headlines. Your reaction is what?
Well, I think, tariffs are the only negative of Trump's economic agenda, most of which is very good. I also, by the way, wouldn't completely give up hope on a settlement. I know a number of people, including myself, that have been in a jury room, selected for a jury, and we're ready to go. Lawyer comes in the last minute and said, hey, we have a settlement, and we all leave. I can't guarantee that, but, the art of the deal for Trump, let's push him to the edge and see what happens. But clearly, if it is 25-25 and then 10 on China, that is a negative impact on the economy and I think on stock prices.
But then why do you have people like Jamie Dimon, who I think it was in Davos, said get over it, essentially as it relates to tariffs? Lutnick, as I said, the proposed Commerce Secretary, saying the notion that these are just across the board inflationary is nonsense.
Well, it's not nonsense. There is some positive effect. Is it a disastrous effect on prices? Probably not. I mean, I've seen some research that suggests if all those tariffs come in, and don't forget, trade is only 10% of GDP, and if all those tariffs come in, it might raise the price level by 0.5 or 0.75%, and that's a one-time increase. So, I wouldn't call that disastrous, but that certainly reorganizes supply chains, all sorts of sourcing situations. And it really depends on how long it lasts. I mean, if he puts it on Saturday, I think a lot of people are going to defer for a few days, and then he could reverse it on Monday or Tuesday if another concession is wrangled from Mexico and these other countries. So it's a bargaining tool. Are you going to get enough in exchange for the negative effect of the tariff in and of itself? And I don't think this play is over yet.
Been a wild week, to say the least, given the DeepSeek story, the headlines, the sell-off in tech, what happened earlier in this week and where we are now. So how does that color your opinion of the stock market here?
Well, I think that, cheaper is better for the economy. Cheaper is better for any AI user. What cheaper isn't better for are perhaps the high-end chip producers. Of course, we all think of NVIDIA as that. And, I'm not an expert in tech. I've been hearing all sorts of stories. Can advanced AI be done on DeepSeek's program? Does it mean advanced AI can be done without the Blackwell chips? I mean, all these questions need to be answered. Autonomous driving, robots, all that. Can that be done with DeepSeek type of transformation? So I think there's still a lot of questions out there. The basic thing is certainly anything cheaper AI-wise is good for the U.S. economy and good overall for the U.S. market.
Yeah. You may not be an expert, as you say, in AI and tech, although you sound well-versed. I will just give you that. And you are an expert, Professor Siegel, on stock market valuations, to which the Fed chair himself this week, when asked directly about economic conditions, financial conditions, called valuations stretched by almost any measure. Now, he was zeroing in, of course, on tech and on AI and those stocks that have done quite well. But what was your view on that comment?
Well, we talk about 22 as a forward-looking PE on S&P. I mean, Mag 7, which is the 493 other stocks, it's around 19, which I don't think is an unreasonable PE.
No, and here's the deal. You have to look at growth rates of companies. You can't just say, oh, the P is this, the forward P is that, and so therefore I make a justification. That's not, let me explain something that's so important to everybody watching this video right now, okay? When you hear somebody just say, oh, the P is high, so therefore that stock's overvalued, they don't understand how to value a company. How you value a company properly is you have to look at where the forward P is in relation to that company versus their industry, their peers, right? Because certain companies certain segments of the market trade higher. Let's say a SaaS company. SaaS companies are kind of like holy grail. They're going to usually trade much higher valuations because people say, hey, you got a bunch of businesses signed up to a software, let's say, for instance, they just keep renewing on that software. It's great for a valuation multiple, right? Versus, say, an oil and gas company that, I don't know about this industry in 10 or 20 years from now, right? So that's first thing. But then you got to look at growth rates. Where's revenue growth? Where's earnings per share growth? So a good example would be Meta, right? Meta, you could say, hey, forward P of 26. Hey, isn't that a little rich? If you were looking at it from just a standpoint of versus a market, you say, okay, because he's speaking about, market trades at, 22, X the Mag 7 out, take those out, maybe 19. So you say, okay, Meta's trading a little rich, right? Not so fast. Meta just grew in the last quarter, revenue 20+%, and earnings per share, they grew over 50%. Which on a revenue growth basis, that's like a 3x or 4x of where an average stock is growing their revenue. And on the EPS side, we're talking that's like 10, that's not 10x. Well, shoot. Yeah, 50% plus. I think they grew 59%. That is like a 10x of an average company in the market. So therefore, and we're not trading nearly at a 10x valuation, are we? A 10x forward multiple? No. We're trading 30% higher or something like that than an average stock, or 40% higher. Not 10x higher, not 1,000% higher. So therefore, you can look at some of these companies and actually they trade undervalued from where, Meta's undervalued today. Meta's forward P should be probably at least a 35 on that one right now instead of a 26. And keep in mind, they come in smash numbers all the time. So when you see 26, that's probably not even going to be the reality number. It's probably going to be far lower than that because the company's likely going to come in and smash numbers, and the earnings per share is going to be way better than expected.
Doing something very substantial on tariffs with the European Union. So we are seeing sharp reactions in the currency markets to a lot of these headlines, peso, Canadian dollar, as well as the euro taking a hit on the back. But what's your initial take here? We sort of knew this was going to happen. We didn't know it was going to happen in quite this way.
We didn't know it was
here we are.
We didn't know Saturday. We heard March 1. I thought March 1 was the headline this morning for Canada and Mexico. After we started to digest that yesterday, China, we've had this number out there, 10% on some levels, already been in the the market and already kind of a relief. The concept of this being to reverse flow of illegal immigrants and illegal drugs is one way to get going on it. I mean, there's a lot of different rationale out there from the administration as to why these things are happening. Ultimately, it's really about a competitive balance that they believe anyone who's in deficit, we're in deficit too, should be had tariffs put on them. It's interesting to think about the currency markets because going into this, you can make an argument that the U.S. dollar was already strong and that there was a lot of pressure, actually potentially on multinationals in this country because of the stronger dollar. We started to hear about that in earnings season. When I hear that, at least at this stage of a cycle, it doesn't really bother me as an investor for a lot of these companies. But for the European Union, which had a 25 basis point cut this week, ECB, if anything, was rumored to maybe they could go more, they will go more. I think we're breaking parity here, and I think it will be, just to be clear, I think that will be a mitigating factor on inflation. I think a stronger dollar certainly will have more buying power and be helpful. But we don't really know what the impact of all this, and it's just interesting to see how quickly tariffs have come back into the market, which closed on the lows today. But think about where we were a week ago.
Yeah, so, he said that he doesn't expect the markets to be affected and that it's not going to affect inflation. I'll just make this point. We just got this GDP number at 2.3%. This is after two consecutive 3% GDP prints, quarterly. And so the economy was kind of limping into the end of the year. I think expectations were higher than that for Q4. So one of the things we can be fairly certain on, if these sorts of tariffs stay on some of these key industries, it is going to weaken economic demand here. It just will. And so at the end of the day, the president uses the stock market as a report card, but if the economy starts to weaken, the S&P is going to start to anticipate that.
I mean, the dollar obviously is such an important thing. The sector, of course, of the area of the market that has the biggest exposure is tech. I mean, bar none, right? So obviously the big consumer staples, the big energy names, but technology is the highest sort of exposure to a weak or strong dollar. And it's no nonsense when the S&P is doing one thing, but the tech now down on the year. You've got semis struggling, and I think a lot of it has to do with not only the great appreciation that preceded this start to the year, but the dollar.
Right. Yeah, and I think a lot of this, too, people were wondering, are the tariffs just going to be negotiation tactics, or are these actually going to come on? And clearly we're seeing these are coming on. And this is why the bond markets have been pricing in inflation. I mean, whether it's tariffs, whether it's tax cuts, I mean, a lot of these are inflationary policies, and that is why markets are concerned about where inflation's going. So they're optimistic about deregulation. They are worried about inflation. Markets are kind of up and down as they're trying to figure out where that's going to go. But I would expect that's going to continue to affect the markets as this news continues to come out.
I mean, we've been thinking about oil and gas and commodities and so on.
There's no doubt. I mean, tariffs are inflationary, right? And I had a post on X today kind of talking about that, like to consider tariffs aren't going to be inflationary. It's just not in economic reality. They are inflationary, absolutely, right? If they're not inflationary, then you can say, well, let's do 100% tariff. Why are we only going to do 25%? Like, if they're not inflationary, let's do 100%. Let's do 1,000%, right? We can make so much money. Like, if they're not inflation, like, of course they're inflationary, right? To say anything other is just propaganda BS. So let's call it what it is. And I called that out on X today, right? And a few people try to argue back, and I kind of dismantled their arguments, which I always love to hear other people's perspectives, but it's pretty easy for me to kind of tear those down, especially on subjects like that. But it just is what it is. The market's going to have to deal with it. Market's not going to like this short term. It's going to cause volatility. Like, it is what it is. Like, but this was to be expected, right? Is the market going to freak out as bad as it did in the first go round? I'm not so convinced of that. I'm not so convinced that it's possible, but at the end of the day, I do think they're coming on at a good time because we have earnings going on right now. So if earnings are just coming in their banger earnings, good guidance, good numbers, beats across the board, I think it's hard for the market to get too tied up into tariffs right now. Like, could we get hit Monday and then bounce back? Like, that's a potential, right? Because if earnings come in and they're smashing, that's going to more than offset kind of the worries around tariffs, right? Because we still got to see all the numbers come in, but that takes time. Like, if you're talking about starting to hit inflation, if you're talking about hurting the economy, things like that, it's wild. Like, it's a process. It's not like it just shows up overnight. It's more shows up 6 months down the road, 12 months down the road, 18 months down the road, 24 months down the road. Okay, so that's something to kind of, like, businesses might take that first initial hit, but then what happens is eventually they start passing on to the consumer one by one, and that's when the inflation starts to really hit. It's not immediate. It's more like you get a tariff today, it might start to actually affect inflation numbers in a very negative way 6 months, 12 months, 24 months from now. It's not immediate. So that's an important thing to remember, okay? All right, guys, appreciate you joining me as always. Thanks so much for being here. Action-packed video, action-packed week. If you're looking to apply to join my private stock group, private wealth group, that will be pinned comment down there. You can click on that, fill out an application. It's going to be a busy week inside my private group as well. A lot of discussions with the 6, 7, and 8-figure members in there. Additionally, you get access to all my best course curriculums, teaching you everything I got up here, as well as access to 1000xstocks.com, the research platform I use on a day in and day out basis. Much love and have a great day.